Hello everyone, welcome back to Fantastic. I know most of you are really interested to know the good tricks and ideas for exiting the stocks at the right time, because let's face it, every investor portrays himself or herself as Arjun while selecting the stocks, but when the times come for exit, merely Abhimanyu emerges from them, who is unaware of the exit route and ends up making either losses or good trivial profits. There are also investors who end up making investments into the right stocks. I mean, they exit their investment after making 20 to 30% returns, but unfortunately the same stocks then later on turn into multi-baggers. So today in this video we are going to focus on the ideas and tricks which can be used by any kind of investor, be it big or small, for applying into their investment ideas while considering the exit, so they can exit in a good profitable ways. So let's see the agenda for today's video. So first of all, we'll listen to Mr. Peter Lynch talk about considering the strategy for exit and his comments on those. Then we'll be focusing on exiting the stocks in profits, as well as we'll also be discussing exiting the stocks in losses. So now without further ado, let's just understand this topic. Before getting into the details, let's have some advice from a great investor, author and a successful fund manager, Mr. Peter Lynch.
When should you sell?
Well, you ought to find out why you bought a stock. If you're saying it's a cyclical company and they're doing poorly and they're doing awful, you wait till things are getting better and they're doing terrific and then you sell it. But with a growth company, you have to say, Walmart's case, 10 years after they went public, you could have bought the stock and made 500 times your money. Because they still are only in 15% of the United States. And they could say, why can't they go to 17? Why can't they go to 19? Why can't they go to 23? So for the next 4 decades, they're around the country. So you have to say to yourself, in this stock, I have a 10-year story, a 20-year story. You ought to be able to write that down and follow that. That's what I do with the company. And that's your decision. That's how you sell it.
So this ACE fund manager is actually trying to tell us you need to rethink before exiting, like why did you buy this stock in the first place? So what does this mean? What happens is basically investors buy the stocks from some kind of recommendations they get, like from the sources they have, but then after that, while exiting the stocks, they start researching for the stock at that time. So if you're actually unaware of the facts or unaware of the growth story or the future performance which is coming, you will remain confused when to book the profits, like at 20%, 30% or 50%. So even after a point, like after crossing 50%, you will feel the need to book the profits and get out because you are unaware of the future performance. So in this case, even after, so let's say consider if you book out the profits at 50%, after 50%, the stock starts multiplying from there onwards. So it is actually very much better to consider researching for the stock and the facts before entering into the stocks or at the time of the entry. So now let's take an example to understand this in detail. So let's talk about electronic vehicles for this example. So the future of electronic vehicles is bright, and we had already covered all the beneficiaries, sectors and stocks of these electronic vehicles in our previous videos. Do check them out. I'll be attaching the links in the description below. So let's take Tata Motors from there. So Tata Motors is an early entrant in the electronic vehicles segment, you can say. If you have observed, if you have seen from the past few quarters, it has been posting very good sales numbers and a consistent growth as well. Although the company is in a high debt, Tata Sons, the parent company, is coming up with plans to lower the debt of the company and implementing them also. The sister companies Tata Power and Tata Chemicals are there to fulfill the needs of Tata Motors of energy and infrastructure. Basically, this company is totally aligned to cater the needs of future electronic vehicles of the nation, and this research we had done, or this revolution which we are expecting, is actually not just for 2-3 months. So this is a future growth story, and it will take at least 5 to 10 years to penetrate into a country. So when we had covered this stock of Tata Motors roughly in mid of October, at that time the stock was trading roughly around 130 rupees, and now it is trading around 180 and 190. So basically what I want to tell is, if you're buying for a vision of 5 to 10 years, which we researched for 5 to 10 years, you should not get distracted from the current or the short-term fluctuations as of now, which are happening as of now. So consider if you're exiting the investment at a 30% profit, which is like as of now it is there in Tata Motors. around 30%. So you will actually end up making or losing, not making, you'll end up making short-term profits but end up losing the huge returns which are coming in the future. So I'm not telling you should not take short-term trades or you should not go into short-term investments. You should be clear about your vision while entering into the stock itself. Like if you're entering with a vision for 5 to 10 years, you should stay put for that and do not get distracted from the short-term fluctuations or profits which will be coming in front of you. And also while investing, ask yourself the big question of why. Like why are you investing into the stocks? What are the facts? What are the reasons of the future growth story? And until and unless there is some harm or there are some alarming signs in this future growth story, the reasons get little bit tainted of the reasons why you bought the stock, you should not consider exiting your investment. Actually, there is another concept called MOAT, which has also been used by Warren Buffett to enter into the stocks, and you can consider exiting the stocks also from that kind of concept. So this MOAT concept we had actually covered and explained in one of our previous videos. I'll be attaching that also in the link in the description below, so do check that out. So we have been talking about the investments and profits, but what about the investments which are in losses? So there are many small investors which hold their investments due to the losses they have. Like for instance, let's take Coal India. Now Coal India is giving a good steady financial performance, but it has been also giving negative returns to the investors from the last many years. So in this case, you need to remember that market always gets attracted to the rising sectors and rising stocks rather than the companies which have steady performance but have a timid future growth or not so attractive future growth. So before investing, like what you can do in this case is, first of all, before investing, do ask yourself the questions that whether there is a growth story, like in the coming times, whether this sector is a rising sector, whether the growth is accelerating in the coming time, what kind of future you see for that particular sector. That you can do before investing, and if your answer is yes to all these questions, then definitely go for it. Now while exiting, you need to also remember that market has its own merits and demerits as well. So if you have to book losses in this kind of thing, do go forward and do it, because what happens, you can add up the same amount to some other stocks where you see good profit growth or good future in the coming time. In that case, you will end up making at least good profits, or you can cover the losses which you had made in the previous one. So just be clear about your vision and align your portfolio to capture the growth story in the coming time, like growth story of the various sectors, and just align it according to the sectors which you see there is growth in the coming time or in the coming years. So what now? I have been actually telling you various tricks and ideas. Follow this, ask yourself that while exiting, while entering. So you might be wondering, where do I find this kind of growth stocks, or how do I analyze them? How do I find these growth stocks? So don't worry, I have a solution for that also. We are going to come up with a series of analyzing videos, analyzing for stocks, like how you can analyze a particular stock, which parameters you need to see for them. While entering into the investments, even you can consider these parameters to consider to exit the existing investments if you want to take decisions on them. So stay tuned for that. So to know when these videos comes up, you'll have to subscribe to our channel and hit the bell icon to get notified when these videos come up. And until then, do check out the other videos which we have covered in the various sectors which have a good future growth, and various stocks which have a good future growth as well. So I have attached the links in the description below. Do check them out and stay tuned with Fantastic, and see you in the next video. Did you know Mr. Peter Lynch, by whom this video is inspired, is also applauded for his masterstroke professional exit. During his 13 years career as a fund manager at Fidelity Investment, he consistently achieved 29.2% annual return, and then he retired at his career peak to continue his philanthropical work.